Hi there, it's Casey Sullivan with the Sullivan Group of CrossCountry Mortgage coming to you today with a commonly asked question that I've been getting from clients since the new year has started. That question is, how are rising mortgage interest rates going to affect me? To start off, rates are up from their lows that we saw over the last 2 years during the pandemic, but they are still historically very low. When it comes to rates, the mainstream media is talking about the Federal Reserve and how they are planning to increase interest rates. Now, the interest rate that the Fed changes is the Fed funds rate, which doesn't necessarily impact long-term mortgage rates. But the words, the guidance, and the actions by the Fed can and normally will affect mortgage rates. However, we may see rates adjust well before the Fed makes any actual changes to their overnight Fed funds rate. More importantly, right now is really what about the Fed does with their purchases of mortgage-backed securities and their decision to what we call taper, which means to slow down the purchasing of mortgage-backed securities. They have really backed off on buying mortgages, and it looks like they might be out of the purchases by March of this year, 2022. We are seeing the effects of this already in rates, and we expect it to continue to put some pressure on rates to come. Now, by how much, you might ask? Gosh, that's just something we don't know. With the current state of the world, with the pandemic, inflation, supply chain issues, overall markets, we may see it have some effect on the decisions of what the Fed will do month to month. So I would just say that yes, you're going to hear from the media that the Feds are going to increase interest rates. And they may portray this to be a very scary thing. We've already seen rates move up this month in January 2022. However, in reality, it's not as scary as it seems. It's very helpful to have a lender run a few scenarios to show the effects of rates on the overall transaction. Because let's say that the interest rates went up 0.25% between when somebody was pre-approved and when they find a home to buy. Now, if they're borrowing, say, $250,000 or multiples of that, that 0.25 point increase in interest rates will change their payment by about $35 per month. Please reach out if you have any questions about the mortgage markets, rates, and how they affect affordability. I am more than happy to walk you through it. Also, stay tuned because the next time the Fed is meeting, I can guarantee you that your phone is going to be ringing because people are going to hear the message about rates are increasing. The number one takeaway that you should tell your clients is when the Federal Reserve increases the Fed funds rate, it does not necessarily impact long-term mortgage rates. Let me get you in contact with my preferred lender and they can walk you through your particular situation and how current interest rates may affect your purchase price or your monthly payment. So this is really the best advice because things are always changing, and we also can always look at it over a projection of what maybe the next 60 to 90 days might be. Now, if you have any questions, concerns regarding mortgage rates in 2022, feel free to call or text me at 925-395-4212 or email me at casey@thesullivangrp.com. I hope this video has helped out, and if you found value in it, please like it and share it with friends. Thanks so much. Bye now.